I got a question for you because I know somebody that inherited some money.
Okay.
They're not quite sure what to do with it. They're thinking stock market, things like that. And I kind of put the word into their head, like, you ever think about investing in real estate? Now, that's what I want to talk to you about today. Real estate versus, say, the stock market.
Yeah. So
Back in the studio, John Brodeen, the one, the only, is here. How are you?
good. How about you?
Good. Been a whole 2 days since we've seen each other.
I know, right?
What's
Happy
new in your
Friday.
world?
Nothing. It's been a busy week. Things are happening. It's
Yeah.
the spring market, so
Yeah, and here we go. Probably a weekend full of crappy weather.
yeah. Hopefully not.
you know,
or hopefully not too bad, at least.
You know, I was walking home, walking up the door yesterday, and, I still have a pile of snow over here. I have beautiful green grass right over here that almost needs mowing.
Yeah.
I go to the one side, and it's not so beautiful. It's more like a dog pasture. But what a goofy year, man.
I know this has been a weird winter, weirder spring.
A weirder spring is
Yeah.
absolutely right. Now, I got a question for you because I know somebody that inherited some money.
Okay.
They're not quite sure what to do with it. They're thinking stock market, things like that. And I kind of put the word into their head, like, you ever think about investing in real estate? Now, that's what I want to talk to you about today. Real estate versus, say, the stock market.
Yeah. So there are certainly some benefits to investing in real estate. A lot of really wealthy people invest in real estate, but investing in real estate is not for everyone. And I also don't want to make it sound like I'm suggesting people put all their eggs in one basket because everybody knows diversifying is good.
Sure.
So, it's probably good to have some of both, even if you are one of those people who is able to invest in real estate. So, real estate's not for everyone. You definitely need the time and the knowledge, the time to acquire the knowledge, the time to save up the capital. It's a much higher barrier to entry. And naturally, it's a more active investment. It's less passive. Investing in the stock market can be pretty passive and hands off. It's pretty cheap and easy to hire a good, financial
Sure.
advisor who's
Yep.
going to be able to manage your investments for you. And that's the way that most people do it, and that's probably the best fit for most people because not everyone knows a ton about the local real estate market, knows how to invest in real estate, knows all the tricks, and it takes a big commitment of time to learn about all that stuff, right? So let's first talk about the stock market. Like we said, completely passive, low barrier to entry. You could start by just investing $500 a month into the stock market and let
Yep.
that build up over time, and then retire off of it or whatever. It's easy and inexpensive to hire an expert to manage your stock market investments and give you some advice there. The downsides are you have less ability to use leverage. Leverage is when you're able to use some of your own money and then a larger chunk of the bank's money to buy an asset where you control the whole thing. You're not going to be able to do that in the stock market, and you're not going to have any control really over those assets that you're investing in when you're investing in the stock market, which is kind of a pro and a con because along with the control comes the responsibility and the hassle factor. But so in real estate, the ways that you make money are appreciation, loan pay down, cash flow. Some unique things about real estate are the leverage aspect where you can take out a loan on a property. And so basically, like let's say if real estate values go up by 3% per year, you're able to, let's say you're able to buy a $200,000 property. So that's going up by $6,000 per year, but you put 25% down. So you put, what is that, 50 grand down?
Okay, yeah.
So rather than getting a 3% return, it's actually 3% times 4 because you're controlling it with only a quarter. You're controlling the whole 200,000 with 50,000 of your own money. So if the rent that's coming in covers all of the maintenance, repairs, vacancy, and covers the loan, principal and interest, your principal is being paid down, but we won't even get into that now. Your principal is being paid down, your interest is being paid, and all the holding costs of the property are being paid, by the tenants. And so you're owning that property it's going up in value by 3% per year on average. And instead of 3%, it's really going up by 12% because you've got $50,000 of your own money. So when that property goes up by $6,000 a year, you're getting $6,000 a year in free equity off of $50,000 of your own money, not $200,000 of your own money.
Okay, so say you got a windfall of say $100,000 to $150,000.
Yep.
And you're thinking, okay, I'm going to buy a rental property.
Yep.
Now, can you make money that way, or are you better off not putting the whole thing down and do like you say? Put what you need down, go get a mortgage for the rest of it, and rent it out. Is that a good way to make money?
Depends how aggressive you are and how your knowledge is about real estate investing. Because if you don't have the knowledge of real estate investing, you're probably not going to know how to analyze the deal to make sure that that's a good deal that's actually going to make you money.
Okay.
When you're buying that house for $150,000. If you're more aggressive and you do have the knowledge, you're going to be able to buy 4 properties instead of just one with that $150,000, right? So that's more cash flow. That's more loans that are being paid down all at once. That's more properties that are going up in value for the same initial investment. If your goal is to be more secure and you want to have more cash flow and less overhead expenses each month, buying cash is a more secure way. Like Dave Ramsey says to only buy real estate investments in cash. That's right for some people, but it's very conservative advice. Because if you're in a stage in life where you can take more risks, it's your returns are going to be much better if you use leverage. You don't want to overuse leverage because then that puts you in kind of a risky position. But you can kind of calculate, and it's not like it's either putting 25% down or putting 0 down, or putting 100% down. If your risk tolerance is putting 50% down. So you own 2 properties instead of 4
Sure.
or instead of just 1. That could be where you fall on that scale. But the first thing, if you're thinking about doing that, is if you don't already understand real estate investing, do a ton of research, read a bunch of books, and learn how to analyze deals, analyze a few deals before just jumping into the first one.
I've been reading some books on investing recently, and one thing I seem to see is let your money make money for you.
Yep.
So you don't have to do it. Does that make sense?
Yeah, 100%. That's that's how anybody would like to retire.
Sure.
And compound interest over your working life is going to help that as well. You keep compounding the interest, whether it's in the stock market or whether it's in real estate, you keep reinvesting into the asset that you invest in. And then you end up with, a lot larger amount than if you were to just stick that same amount into a 0.5% interest savings account for your entire career. You'd have to work way harder and save way more money in order to get to the same place of retirement.
So a guy like I'm talking about, he's just better off going and talking to you.
Yeah, and it's I can't solve everything
Sure.
for somebody who's looking to get into real estate investing. I can try to help you, but if you don't fully understand it yourself, I'd be more comfortable with them educating themselves, and I can help them, make that first move and help them get off the fence and give them some advice, but I can't do everything for them.
Right.
That's the difference between a stock market advisor. They can pretty much tell you everything, and you don't need to educate yourself. Much,
That's what they're getting paid for.
Yeah, that's what they're getting paid for. With me, I can help them through the purchase, and I can, myself as an investor, I can help give some valuable knowledge.
Sure.
But, I'm not the one, like they could hire out management, but, you still need to manage the property manager. Even when you hire out management, make sure everything's being done right, make sure you're not being overbilled and whatever else, So it's a much more involved investment than sticking that money into the stock market, and that's why it's not for everybody.
Okay. John Brodeen, you always have your poop in a group. Every time you come into the studio here, you got more notes. What do you got else there?
So there's some unique tax benefits to owning real estate. Think of it this way. The government doesn't want to have to provide housing for people who aren't buying houses, right?
Sure, right.
Imagine if the only people who owned real estate, all they owned was their own primary residence and they never owned anything else. So imagine if the government had to provide every single building that a Burger King was in, or that a Starbucks was in, or that a law firm was in, and the government had to own every building that, low rent tenants and high rent tenants, and they had to do all that. That is not what the government's for.
No,
the government
no.
doesn't want to do that.
Right.
And so they incentivize people like me and you to go ahead and take that risk and own that property. And there are tax incentives to get people to invest their money in real estate, because they want private people to provide housing and, in exchange, make a profit and make an investment. So there's depreciation where you're allowed to take a certain percentage of the property. And I'm not an accountant, so I'm going to butcher this probably, but basically you get a depreciation write-off. Even though your asset is appreciating in value, the components of the asset are depreciating in value. So your siding's getting older, your roof's getting older, your furnace is getting older. So they allow you to take a write-off for that stuff going down in value, which typically offsets the cash flow off the property.
Doesn't come out of your pocket.
Yeah, exactly. So the income you earn off of rental properties, for example, does have tax benefits. And then the other huge benefit, is forced appreciation. So being able you have control over that asset. That's a blessing and a curse, depending on how you look at it and who you are. But you can control that asset. You can make that asset worth more money. You can make that asset be able to rent for more money. So being able to put your own money into the asset, fix it up, be able to rent it out for more money, is a way to generate more income off a property, and creates opportunity, and also incentivizes people to be able to fix up, houses and neighborhoods that are dilapidated. So there's a lot of unique opportunities in real estate investing. And the other thing I should mention with leverage, I didn't mention this, is there's risk in leverage, because that property, historically, it doesn't go up by 3% per year like clockwork. Where it's just 3% this year, 3% the next year, 3% the next year. You might have 5 years where it stays flat or takes a slight dip. And then you might have 5 years where it climbs really fast. But over a long period of time, it averages out to 3% per year. If you're in a period where real estate values do drop, if values drop by 1%, your investment is losing 4%, right?
Right.
Just like if it goes up by 1%, your initial cash invested is gaining 4%. So the gains are multiplied, the losses are also multiplied. That's when I say that cash is a more secure, safe, conservative investment. That's the reason I say that.
Well, let's face it, not too often, if you own rental property and you're renting it out, not too often does rent go down.
Yeah, that's true. Yeah, rent normally doesn't go down. Property values normally don't go down in the long term. There's a reason some of the wealthiest people in the world choose real estate, and it's for the control, for the tax benefits, for the appreciation, for the loan pay down. There's so many different ways that you make money off real estate investments.
The money's making the money for you.
Yeah, like myself personally, I put a ton of time into learning all about everything I could about real estate investing long before I ever bought my first investment property back in 2016. And it's paid off for me a lot. It's the best investments I've ever made. Because, it's, the time in, the rent growth, the appreciation, the loan pay down, it all, I couldn't have made the amount of money that I made off my rental property investments in that same amount of time investing the same amount of money in the stock market.
Okay. Anything else for us today there, buddy?
No, that's everything. That's it.
Okay. Big plans for the weekend?
Let's see. Training on Saturday. Not sure what we've got
Training
going
on Saturday? I thought you took weekends off.
Yeah.
Oh,
okay. I don't take weekends off. I don't eat as clean.
Okay. You got a free day on Sunday, maybe?
No, I'll still probably train. Me and a group of guys train.
Yeah. The heck?
But yeah, I like doing that. That's what I
get it. I used to be kind of like that when I was young and skinny.
Yeah. No, it's fun. I love the guys I train with, and it's my passion. So
awesome.
Yeah.
Awesome.
But just like we talked about in the last one, if people have questions about real estate investing versus the stock market, they have specific questions they'd like me to cover in a future podcast or future video, leave it below in the comments, send me a DM. And yeah, go ahead and give me a follow on Instagram, on all the other social platforms, subscribe to me on YouTube. I put out a ton of great content on all those platforms. And I think you guys will like it. So,
All right. Phone numbers or anything to get a hold of realty expert John Brodin.
You want to become a client? You want to ask me questions about real estate investing? 701-213-5428 is my cell.
Have yourself a wonderful weekend, my man.
You too.
And don't train too hard.
Yeah.